Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter. Fast, loud, and slightly judgmental. Let's go. Fed rate cut odds surge ahead of Powell. Powell seemingly Fed. Watch now shows October rate cut odds spiking to about 92%, with traders clearly front-running a dovish pivot before Fed Chair Powell speaks next week. That means markets are pricing an easier policy and a fresh wave of liquidity hunting for returns. And crypto is usually first in line for risk appetite. Expect roller coaster volatility, quick runs, violent retracements, and levered traders getting creative with options and perp funding. Why it matters for crypto investing. A dovish Powell is the single biggest near-term catalyst for broad BTC, ETH, and high beta alts rallies. Liquidity flows drive price action more than memes do. Risk or counterpoint. If Powell leans hawkish or the cut gets delayed, expect a nasty unwind. Position sizing and leverage discipline are mandatory. Tether mints 5 billion USDT in 8 days after Fed cut. Tether minted roughly 5 billion USDT over 8 days, including a 1 billion mint on September 19th, shifting on-chain supply back toward Ethereum and rebalancing against Tron. Some mints are labeled authorized but not issued, but a lot of that supply is flowing through exchange and DeFi corridors where it can be deployed as buying power. Historically, sudden USDT mint waves are the rocket fuel for spot and perp markets. More stablecoin equals more immediate bidding pressure. Why it matters for crypto investing. Flash mints tighten futures bases and provide the liquidity that fuels altcoin pumps and short squeezes. Risk at counterpoint. Not every mint gets deployed. Some sites idle or is used for internal accounting. So watch large wallet movements and exchange inflows before leaping in. Institutional flow for XRP accelerates with ETF debut and CME options. The Rex Osprey XRP ETF debuted with about $37 million of day one volume, and CME is launching XRP futures options in October. Institutional access and hedging tools are arriving. Combine ETF demand with exchange-grade options, and you get easier entry for allocators and much cleaner ways to manage risk. Historically, ETFs plus derivatives markets compress spreads, improve liquidity, and can amplify rallies when flows hit. Why it matters for crypto investing. XRPR plus CME options create an institutional tailwind and higher order flow-driven volatility that traders can target. Risk counterpoint. ETF debut hype can fade fast if retail interest cools or if ETF inflows are tiny relative to float. Options also add complexity and fast gamma squeezes. Crypto.com allegedly breached by Scattered Spider. Disclosure drama. Bloomberg reports Crypto.com experienced an internal data breach by the Scattered Spider Group. Apparently a social engineering attack tied to teenage operators, and the firm didn't initially disclose the incident publicly. Crypto.com says few people were affected and no funds moved, but the lack of transparency triggered chain sleuths and regulatory eyebrow-raising. Exchange security and opacity headlines dent user confidence quickly, and narrative risk spreads faster than any token. Why it matters for crypto investing. Security and disclosure issues can slow inflows, prompt withdrawals, and widen exchange spreads for assets concentrated on that platform. Risk counterpoint. If funds truly weren't affected, the price impact may be short-lived. Still, reputational hits can linger and alter routing liquidity behavior. Mr. Beast transfers $114,000 to Aster. Influencer pump frenzy. Arkham on-chain data shows Mysteria. Beast moved about $114,000 to buy Aster, which had already exploded roughly 1,600% since launch and was up about 1,900% in a week. High-profile attention plus engagement from Binance-adjacent figures sent Aster to new all-time highs in a retail FOMO wave. Celebrity buys are pure accelerator fuel for pumps, and once the optics land, the retail herd piles in with reckless optimism. Why it matters for crypto investing. Celebrity and exchange founder visibility can create hyper-volatile, fast liquidity events perfect for aggressive scalps. Risk counterpoint. These moves are often unsustainable. Illiquid listings can collapse violently on the unwind, so keep exits pre-planned. Blockchain FX pre-sale mania. 7.6 million raised. Daily USDT rewards Blockchain FX's pre-sale reportedly cleared about $7.6 to $7.7 million, with over 10,000 participants at a pre-sale price of $0.024 and an advertised launch price of $0.05. The project promises a super app utility, daily USDT rewards for holders, and a 30% pre-sale bonus code. Basically every word a degen wants to hear. Pre-sale narratives and passive yield pitches attract capital fast. Pre-sales are a classic playground for rugs, centralization, and cruel unlocks. Why it matters for crypto investing. Pre-sales can kickstart short-term token runs and social FOMO that spill into listings. Risk counterpoint. High rug and liquidity risk, opaque vesting, and the possibility that launch markets don't respect the advertised pricing. Treat pre-sales like flash powder, explosive and dangerous. BitGo, S1 filed for NYSE IPO. Custody goes public with big assets under care. BitGo filed an S1 to go public on the NYSE under ticker B2GO, naming Goldman Sachs and Citi as lead underwriters and reporting about $90.3 billion of client assets on custody. The filing shows revenue growth, a controlled company setup with founders keeping voting control, which is par for the course but still notable. A custodian IPO is a structural signal that the industry is maturing and that institutional plumbing is commodifying. Why it matters for crypto investing. A major custodian IPO can validate institutional allocation, supporting a longer-term narrative for inflows and product growth. Risk a counterpoint. IPO filings don't guarantee investor demand. Market conditions and regulatory uncertainty could dampen enthusiasm or delay listing benefits. Coinbase wants to be the crypto super app. On-ramps, cards, and more. Coinbase's CEO, Brian Armstrong, publicly said the company aims to become a crypto super app by integrating credit cards, payments, and broad financial services tied to crypto, basically trying to be your primary financial account for tokens and fiat. If Coinbase executes, onboarding friction drops and retail volume could spike, which is exactly the kind of thing that boosts exchange-derived liquidity and altcoin action. Execution risk and regulatory entanglements are the usual hitch, but the ambition alone keeps Coinbase at the center of retail flow narratives. Why it matters for crypto investing. Better fiat crypto integrations mean more users, higher volume, and more retail-driven volatility in listings and smaller caps. Risk at counterpoint. Regulatory roadblocks or product misfires could stall adoption. Being everywhere can also invite scrutiny. Quick trade-focused takeaways. Macro. Powell and rate cuts, plus stablecoin mints remain the dominant drivers for broad market swings. Watch CME Fed. Watch enlarge USDT wallet movements for the next push. XRP now has ETF and options catalysts that justify putting it on a volatility watch list. Security headlines like the Crypto.com story can induce exchange withdrawals and sudden liquidity squeezes. Meme celebrity plays like Aster and pre-sale frenzies like Blockchain FX are popcorn trades, high reward if timed, soul-crushing if not. Custody and infra stories like BitGo's S1 and Coinbase's super app build are structural positives that underpin longer horizon institutional flows. All right, that's your daily dose of chaos. Hit subscribe if you like fast takes, brutal honesty, and the occasional laugh at market pain. That's today in crypto, where the gains are imaginary and the pain is real.